So as the one main move has come in the euro today, I thought I'd have a look at this in terms of the execution from a price action point of view, but then also how to play the continuation of this move. For a continuation, yes, very nice setup where you leave low volume, which provides a bit of support. This comes in just below the key level, and that was below the 113.23s. The low on this drop was 21s. On the top of the low volume, I'll bring a ladder up for you in a moment so you can see that, offering you a chance that if you've got in on this first breakout, which we'll see how you could have, to then stay in, use this low volume to help you stay in the trade, but also use this low volume as a chance to add on as a passive entry. Beyond that, you've also got a favourite, the 1 minute exponential moving average, to hold you into this trade as well. Until it starts dipping below there, you can hold on to this, allowing you to stay in for a much larger move. I'll show you how this plays out in terms of a ladder. Here we go. And something that you quite often see, something that I've talked about previously in the pound. What you're looking for is this bid that builds. So as we start trading more and more into the 14s, which is this little level here that could set, effectively this is a trigger. The break of 14 sets up the possibility of breaking 23s. So what you're waiting for is, you want to see a bid coming into this area. At the moment, we're not seeing any bid here. Quite slow activity. Anything that comes on the offer gets snapped up. There we go. A little bit more trade comes on the offer. Offer falls down, we trade 13.5. What we're looking for here is we're looking for trade into the offer, get a decent bid at 14s, start trading 14.5. Then we can look for the next leg up. So we'll see this in just a moment, and then the pace starts to pick up. There we go, got a bid at 14s, still trades back through it, quite nice and easy. We're not seeing this bid at 14 instigate any buying into 14.5. That's what you really want to see. So back bid at 14s. Are we getting the buying coming in? Not yet. There we go, 26 buys into 14.5. Comes straight back, so 32 comes straight on the bid there. This is now a sign we're not getting the selling back down now, and that bid is starting to move up. Bid increases. Now we get a little jump. So that little skip up is enough to start thinking, yes, the move could well be on. What we want to see now is trade through the size that you've got on the ladder. See 100 gets traded. Are we backing off from there? No, the bids continue to increase. So each time it trades back, it trades into the offer. There we go. There's the first move up to 23s. And then you see this low volume appear. This now is your opportunity to buy it on that low volume, using that as support, which gives you the opportunity for a continuation all the way up towards 27, 28s. After the fact as well, once you then get the drop down, this remains supportive. So even if you're not filled on the first move down, you get the chance to leave those bids there. You've got the low volume below to support you. So this is very much a passive trade. This is where we get up to on that first little skip up. But this remains your passive area of support. That as long as we're holding above 23s, you're looking for a continuation. We get the continuation eventually. It does take its time, but this is the thing. With a passive trade, the move's going to take its time. But like I said, the next leg of staying in this trade, once you break the 27s that we're about to reach just now, the 20 period exponential moving average holds you in that trade further. So back off to 27s once more, gives you another leg of support, and this way you can start shifting your stop further and further up. And it's only once it then starts trading through there that you can start coming out at around 37s. So you saw the price action to get you in. It was then a case of how you stay in the trade, and that's often an important thing to be looking for. Not just what gets you in, but how you're going to manage that trade once you're in. If you're in now from 16s, 14s area, what's going to keep you in? What's going to enable you to make the most out of this trade? And keeping your stops below this low volume area is exactly what's going to enable you to do that. If we hold above 23s today, then we potentially are onto a much larger move higher. So make sure you're thinking about the whole move, not just your execution to get yourself in.